All right, continuing our education series on mobile home park investing here, we're going to talk about due diligence, and we're going to keep it at a pretty high level. This is what I think of as the 80-20 Pareto principle approach to due diligence. When I was an operator, I tended to focus on that 80% level because I would hire other experts that would come in and finish that last 20% to get into the nitty-gritty details on, for example, the condition of the water and sewer lines, the water meters, the type and brand and the usage, the accounting forensics. That's a fancy way of just saying the bookkeeper and controller would dig into the actual numbers, make sure the balance sheet, profit statement, and cash flow statement, and there's nothing shady going on there. And so you want to take that kind of approach. It's a team approach, but you as the buyer or the investor, you want to obviously do a first pass at it, especially at the beginning before you've built out the team and you've built out the trust in your individual teammates to actually do all the due or most of the due diligence for you. So today, once again, we're just going to dig into the due diligence as if you have tied up the property, the seller has sent you all of the diligence files, and you are starting to dig in and get into the process of reviewing those files and hopefully taking the deal to the next level. And I think this will be useful even if you're never going to be an actual operator of parks. If you just plan on being a passive investor, this still is helpful just to really understand the asset class and the quirks and why it's different than just about every other real estate investment type out there. All right, so let's dive in. Just off the start here, this isn't a bad looking due diligence file. I have seen much worse. Oftentimes you won't even get digital files, at least with some sellers, especially mom and pop sellers. They will overnight a package of paper files, which is a lot of fun. And 10 years ago, I would even get a couple of CD-ROMs that you'd have to download and find a new computer that could actually use that, which was a lot of fun. But this isn't too bad. Normally if I was running the show here, what I ended up doing is I would send a link that would just have the folders in order and labeled and very organized and neat. This Dropbox link I would send to the seller or their broker if one was involved, and that at least gives them a framework. Okay, I can put the financials here, I can put them under this year in the subfolder, and then it comes in a lot cleaner. You don't have to get that, right? Especially with older sellers, but this would be pretty solid. There are at least folders. Oftentimes you will just get a sea of files that is not organized at all, right? It's just a giant file dump that they send you with no rhyme or reason. Maybe the files aren't even named. It's just a number because they scanned it. So I've seen just about anything, but once again, this isn't too bad. All right, so just ticking through here and each of the line items, current balance sheet, this is not super important unless they're doing some shenanigans with the capitalization of recurring expenses. Now, what does that mean? So normally the income statement is what you care about the most. Sometimes you don't even get sellers that do a balance sheet or a cash flow statement. But the income statement, what they could do is they could be taking expenses that are fairly recurring in nature, like maintenance on the sewer pipes or water pipes. And they can be taking those recurring expenses and pulling them off the income statement and putting them on the balance sheet. That's called capitalizing an expense. And what that does is that would increase your net income that year, but it would do so artificially because that is a fairly recurring expense that the buyer should expect to have on an ongoing basis moving forward. And so that is one thing to watch on the balance sheet. Is the plumbing line item or the water line item or even the roads, are those going up in value every year if you're looking at several years of balance sheets, or are they declining, which normally they would unless they're doing major capital projects, which would be valid, right? If you're doing a $200,000 project in 1 year, that's not going to be recurring. So if they are declining, that's good because that means they're depreciating them from when they purchased the asset, and that's pretty normal, but they shouldn't be shooting up on a regular basis. That's something to flag and look into if they are. CapEx, 3 years. This is great because you want to know, okay, hey, did you redo the roads? Did you redo the water lines? Like, did you install a bunch of new pads to expand the park? So this is useful, of course. Now, 3 years of P&Ls, this is always the most important file, I think, when you get a due diligence file. Hopefully you get 5 years at least. And that way you can do a variance, right? So you can put all of these years into Excel and you can see year to year what is changing, because you want to be able to identify and figure out what's the cause of any major changes. So if revenues are all over the place, that's probably a sign that there's some weird vacancy issues here. Maybe some homes are being pulled, or maybe some of the homes are actually RVs, or they're having more collection problems than you might like as the new buyer. And then you want to see the expenses. Are the expenses fairly stable and perhaps growing in inflation, or are they also all over the board, which would indicate maybe a water leak, that you might need to replace the lines if that's happening consistently. If maintenance is all over the place, you're going to have to dig in with the seller and figure out what's going on here. So these are questions that the lender is going to ask you, because they are 100% going to do this analysis for themselves to try to figure out, are there any weird risks that we're taking on by putting a loan on this park? What they really want to see is just revenues up and to the right, nice and steady, and they want to see expenses growing, and they want to see expenses being pretty stable, fine, growing by inflation, but they definitely don't like to see squiggly lines, if you know what I mean. So if we're just going in here at the last P&L that we got was for 15, because we bought this in 2016. All right, let's go in here to 2015, which was the last P&L that we got. We purchased this in 2016. So this was by far the most important P&L. All right, so not too fancy. This seller was doing his own accounting. He was not an accountant, but he was doing his own books. And so he didn't get too detailed here with the line items. He tended to cluster expenses into some big categories here. But just real quickly, we'll tick through some of these. Rental income, pretty self-explanatory for lot rent. This prompt payment credit, this is a weird quirk. I've never seen this again in any other property where there are actually refunds back to the tenants if they paid by a certain date. Pretty clever. He actually had pretty good collections at this park. And you'll notice if you look at enough deals, you look at hundreds of deals over time, that there are going to be weird quirks that you can't even prepare for. You're just going to be like, wow, I've never seen that before. And you just ask the seller the question. Miscellaneous income, that was storage, rent. There was some self-storage assets on this property in addition to a laundry room. So laundry fees, which is kind of a bummer to run those, but I think it was 150 pad park. Mobile home taxes collected, $36,000. That's odd, right? You don't have to collect the personal property taxes for the mobile homes for the state or city. Normally the tenants who own the homes just pay those directly, but once again, a little quirk here. And so for this park, the property was paying the water bills every month, and then they were billing the tenants separately to get reimbursements. And as you can see here, if you take that 24,000 or maybe it was 31,000 here in total, and you compare that to utility charges of 95,000, well, that's a pretty healthy disconnect. Line items are never 100%. You never recoup 100% because there's leakage. People leave every once in a while, but your goal should be at least to get that to 80% plus from a reimbursement standpoint. Now, the reason why there was such a large delta here is that he was running through a project to go ahead and submeter each lot so he could charge all of the tenants for their water usage. And that is why this giant number here on maintenance, another misspelling, is so big, right? He didn't have $265,000 of recurring maintenance expenses at this property. $200,000 of this was to replace the water lines because he was going through this big water reimbursement project and he had to get the city on board, yada, yada. So you want to pull that $200,000 out of the income statement and put it on the balance sheet, right? From an analysis standpoint, because you're not going to have to spend $200,000 obviously every year. All right. Officer's insurance, $9,000. Well, that's unique. Usually a professional operator or property management company is not going to be paying for officer's insurance. I think this was like key man insurance, which is a crazy line item to include in a mobile home park P&L. Other crazy line items were the telephone for $5,000. The park telephone probably cost, I don't know, $100 a month at max. He was throwing his family's cell phone plans in here. His officer salary here of $61,000. I remember that being pretty high at the time, given the actual amount of work that was going into the property. It was a fairly part-time job because it was mostly tenant-owned homes, fairly full. Then you got snow plowing. That's a huge line item. I mean, this was in a pretty cold area, but I mean, they weren't moving around that much snow. You can create Santa's Village with that much snow. He was paying for a few trucks in this line for, I believe, him and perhaps his son. But as you can see, there's no line item here for interest payments, mortgage payments, no debt costs. And he also had run through his depreciation schedule already because he had owned this property for 30 plus years. He developed it with his father. So you can kind of guess what's going on here. He is inflating these numbers to make this $14,000 look pretty small because that's going to be his taxable income. Whereas normally, I mean, just conservatively, say he was spending 50% on expenses, say he had a 50% operating margin, which would be high, but just let's say half of the revenue went to expenses. And then he's looking closer to a $340,000 expense here. And then he's got $340,000 of income that he's going to report to the IRS. And so he's saving himself a fair amount in taxes here. And so I think you understand what's going on. But this was a problem when he tried to sell it to a local buyer who saw these financial statements and was like, I can't do anything with this because my lender is not going to give me a loan based on a $15,000 operating income property, right? So we came in, we have lenders that understand what we do. We can explain this away. We can recreate financials based on how we would operate the property, even with existing numbers. And so occasionally you have to do that. You have to bring in a lender that knows the space cold and is not just a regional bank that's used to lending on other assets. For a property like this, it's useful to have a lender that knows the space very well. All right, that's the P&L. All right, back to the mothership here. Tenant leases, pretty self-explanatory. You can have a lawyer look at it from the state just to make sure that it includes everything that you need to be able to evict tenants for non-payment, or if you need to change some language in your standard lease or amendments, that'd be useful. Utility bills, also self-explanatory. You want to make sure that these add up to the same numbers he's reporting in his P&L. And of course, you're looking for large spikes in the past, and so you can flag those and talk to the seller about them. Next up, notices, violations from government agencies. It depends on the state and city where the park is located. Some cities and states are all over mobile home parks from a regulatory standpoint. They have people that are coming out to inspect the park either once a year, twice a year. Maybe the local government is way more involved. Maybe the health department is involved. So it's best to know, A, have there been any recent violations that are critical and need to be addressed? And two, on an ongoing basis, who are you going to have to be in touch with and be compliant with moving forward? You just want to know what you're getting into from a regulatory standpoint, because this is risk, right? If you had a park that was getting notices every month, maybe they are current, they fixed all these notices, but maybe they've been fined, and perhaps you don't want to deal with that hassle. So it's important to understand, the regulatory backdrop for this particular park. Bank statements, this is just verifying that the seller is not cooking the books. You want to go through these bank statements one by one, or have an accountant do it and actually tie the cash to the P&L. You can just focus on the revenue if you want. Some people just focus on the revenue, but if you're going to do this at a detailed level, you would want to recreate the financial statements just by looking at the bank statements. That is the most foolproof way of verifying that they're not cooking the books, in my mind. Now, you also need to make sure that these random deposits that are showing up in the account, sometimes you'll see a $10,000 deposit, $20,000 deposit, and it's inconsistent with how the rent checks have been deposited in the past. Those are red flags, because I have seen sellers, when they're getting ready to sell the property, they will throw in a deposit that's coming from their own bank account, right, that they can recoup that cash later from the property bank account. So just something to be aware of. Business license, operating permits, these are critical to run a mobile home park. If you don't have a valid permit, you technically are running an illegal property. So this is critical. Make sure those are current. Copy of rules and regulations, not a critical thing. You just want to understand, how are they managing the property currently from a rule standpoint? Are they enforcing the rules? All right, insurance, there's going to be property insurance liability. There's going to be loss of business income, which is, in my opinion, fairly useless. But there's going to be a couple different insurance policies that your lender is going to need here. Sometimes there's an umbrella policy that they're going to want. Most sellers don't have that, but those are the three major policies. And then there's another policy that you might have if there are mobile homes that the park owns, right? That's going to be a separate mobile home personal property insurance policy. And here you don't need to do a ton of due diligence other than, what are the loss runs? What are the recent claims that the seller has made on his insurance policy? His or hers. So then okay, am I buying a clunker here? Hey, did this thing recently flood or something? Or, was there some major calamity that I'm actually walking into that I didn't know about? So you want to get the loss run, which ideally would be included in that folder. Property tax bills, pretty critical you understand how that works. More importantly, how does the reassessment of the property taxes work after you purchase the property, presumably at a much higher purchase price than is being carried on the books that the assessor has been coming up with these bills for the particular property. Okay, property tax returns. These can be useful because you obviously want to see, okay, is there a whole different set of books for the property taxes that don't line up with the P&Ls? Oftentimes, if you're digging into the tax returns, you're going to find line items and balance sheet items and expenses that were not on the P&L. And so this is a great way to red flag some issues with the books for sure. Next up, property insurance. I included that with mobile home insurance up here, so don't need to talk about that. Rent roll, pretty self-explanatory. Like, who's at the property? What are they paying? What are they reimbursing? When did they move in? Ideally, they have all that detail in the rent roll. All right, next up, you got the survey here. That's the drawings. That's either a boundary survey, which is pretty simple, mostly just covers covers the property line to figure out where does the property end. That might be a boundary survey if it's a pretty simple lender, pretty simple property that just covers the perimeter of the park, right? The property lines. Or it could be a full Alta survey that's going to draw every little thing on that property from the driveways to the fire hydrants to the mailbox to each individual home. I've even seen some with the trees drawn in. So those can get very detailed and very expensive. So you want to figure out, what do we need for the lender and what do we care about as a risk as the buyer? And you mostly care about things that are just going to limit the use of the property, of course, right? Ingress, egress, the ability for people to use easements on your property. And here, your lawyer and also whoever is doing the survey drawings is going to be extremely helpful. You don't have to be the world's expert at surveys. You just need to have an expert identify any risks that you're taking on that are a little unusual with the survey. And ideally, you want to get this done pretty quickly because the survey, it tends to be the last thing that's done. It just takes a long time to do it and it's very expensive and the surveyors get backed up at various parts of the year. So this one I'd like to get ahead of. I've often lost money on surveys just because I want to do it pretty quickly in the due diligence process. And sometimes you just end up killing the deal. But still, I thought it was worthwhile. But it probably saved us just as much money because we killed a deal or two that it had a big problem. Once again, just get the pros involved and ask questions and you're going to learn it pretty quickly. Okay, the last folder here, 12 months P&L. Obviously, if you're buying this thing in July, you want to see the first 6 months of the year because you only up here had yearly P&Ls. You want to be able to see a trended go forward P&L. What's the next 12 months going to look like? What were the prior 12 months? Pretty self-explanatory. Okay, down here to the rando files. Checking account, I don't know what that was. City sewer bill, okay, that should be in utilities, fine. DD sewer camera, this is a fun one. So oftentimes you would get an expert to come out there and scope the lines, the water lines and the sewer lines. And most of the time you want to have the sewer line scoped with the video. And so they will actually go down there with their equipment. Sometimes they're pulling the camera through. Sometimes it's like a remote control with wheels. They're going to take a video of the lines to make sure there's not any giant bellies, it's not collapsing. You want to see that the pipes are going to hold up, that they're not just going to collapse the second you buy this thing and create this huge expense. So that's pretty important. Next up, lot map. That's just an aerial of the park. Real simple. Like here's lot 5 through 25 on this road, right? And so you can kind of navigate and know where the homes are within the property. Next, due diligence list. Pretty sure that's what we sent the seller as a request for what files to send us back. Here it's a PDF, but normally I would send an Excel file so we can write notes in the boxes next to each item so they could check off that they think that they have submitted what we needed. And then it's a dynamic file if you're emailing it back and forth, which I hated. I always tried to get them to update the file directly in the Dropbox folder, or you can use something like Sheets with Google, which is more dynamic and is in one location and that could be updated live. Rent collected, because we were closing, I think in January, February, we wanted to know, hey, did the recent rent collections look good? Same with this trash bill and same with the utilities. Here are the last couple of files. All right. Okay. Hopefully that was helpful. That's your due diligence, 80% overview, what you're going to tackle first once those files come in after you tied up the deal and are starting to work with the seller on the diligence process. All right. There you go. Thank you.